So the solution to these problems, beyond significantly productivity gains, is what the macro analysts call as debt monetization, which is, in simple words, to print more money. Hey everyone, welcome back to our crypto talk. Today we'll be diving into the current market chaos that's shaking up both the traditional and crypto markets. And there's a lot to unpack, so let's straight away get into it. So straight away, starting off with Japan. Japan's Nikkei 225 has just experienced its largest two-day drop ever, plunging 12%. It's a decline greater than the Black Monday that occurred in 1987. So it's a huge black swan event, and this fall, has erased all of its year-to-date gains and, more or less pushed it into the bear market territory. So what happened is that the Bank of Japan, the BOJ, decided to, raise interest rates by 0.25%, which is the highest level since 2008. And I feel this is the primary culprit because this rate hike, as I mentioned, is the highest since 2008. And this rate hike, has led to a significant appreciation of the yen, which has unwounded the carry trade. And I'm sure you might have heard about carry trade, if not before, then today for sure. But if you haven't, don't worry, well, it's just a strategy where investors, borrow money from a country with low interest rates like Japan, and they invest it in higher yielding assets elsewhere. So basically they borrow money from Japan. The currency of Japan is yen. So they borrow yen and they use that money to invest in higher yielding assets elsewhere. So yeah, that is what was happening for a long time when the interest rates were low, comparatively low, right? So, but now with the yen appreciating and the interest rates rising, the investors needed to repay their yen loans, obviously, which caused them to sell off these assets. And this selling pressure is adding up to the market's turbulence, and it may continue to suppress markets throughout the week. And, however, efforts to stabilize markets have, been there, talked about. It might also involve printing more money, which could eventually, benefit. But the repercussions of this whole thing in Japan, is being felt globally. And I'll just give you a quick TLDR of what's happened today. 5th of August, I'm recording this video. What happened today? Bitcoin fell below $50K. Ethereum dipped below $2.3K. The Nikkei 225, it has seen its biggest two-day decline on record. Also talking about the magnificent 7 stocks, including Google, Amazon, Nvidia, Microsoft, Apple, Meta, and Tesla, they collectively lost over 1 trillion in market cap today. Let that sink in, man. Let that sink in. They collectively lost 1 trillion in market cap today itself, in the last 24 hours. If that's not enough, 1 billion has been liquidated from the crypto markets in the past 24 hours. South Korea has suspended all sell orders on its stock exchange. The Nasdaq futures plunged by up to 6.5% in a single day. And if that's not enough, Taiwan stock market experienced its worst day in 57 years. So, it was a dark day for, the financial markets, the global financial markets, be it stocks, be it commodities, be it crypto and whatnot, Now talking about the current market sentiment, right now, obviously there's a bearish sentiment which is dominating. The shorts are performing well. The bears are stronger. The bulls are, struggling again. There's a lack of bullish news or positive developments around the globe. But I feel, you should remember that this isn't a permanent situation. This for sure isn't a permanent situation, right? And positive developments such as the central banks may be increasing their Bitcoin holdings, or countries like El Salvador buying more Bitcoin. This could surely trigger the market turnaround. And that day is not too far away when you'll, see that news that El Salvador bought more Bitcoin. Even you guys know that. So yes, positive news will follow and the market sentiment will, turn around. That's what I expect, that the fundamentally strong coins would, outperform the other projects, the other coins. Because, the last 10 years, the last decade in crypto has been just speculative. There hasn't been much focus around the fundamentals, towards more stability, towards more fundamentally driven investments. People have been, just throwing money here and there. Similar to how the traditional stocks operate, crypto would be, uh, going in that direction. I feel the companies existing today would be some of them, a few of them, fundamentally strong projects, who have, started to make profits, or maybe will start to make profits in the coming years, would turn up as big companies, would, function like big companies, profit making big companies. And yes, that's what I feel. And coming back to what happened and what's going around in the world. So according to a recent BIS report, which is, prepared by the central bank of central banks, both debt and inflation could pose significant risks and could cause serious market volatility. So talking about the debt risks, excessive debt could, lead to rising long-term interest rates as the supply of bonds outpaces demand, which would indeed, cause the bond prices to fall and yields to rise. In this case, the uncertainty around the fiscal policy can create bond market volatility. Government bonds, which are, typically treated safer, they are often used as collateral for loans. So in this case, if the bonds, experience volatility due to poor fiscal policies, those who borrowed against them, could face forced selling, which can indeed, create the market instability. So that was about the debt risks. Now coming to inflation risks. So basically, if inflation rises significantly, the bondholders would demand higher yields to compensate for the reduced purchasing power for future payments. And this is basically what could lead to the bond market volatility. So the solution to these problems, beyond significantly productivity gains, is what the macro analysts call as debt monetization, which is, in simple words, to print more money. And in this case, central banks may, need to buy up the excess government debt to keep yields down and stabilize the markets. And this process would, likely benefit risk assets like cryptocurrencies, because they are the most sensitive to liquidity changes. I mean, let's go to the next topic, which is the US economic indicators and recession. So basically, in the US, the rising unemployment rates have traditionally signaled a recession, right? Recently. But this trend started way back in October 2023, suggesting that the US might have been in recession for several months now. So, I mean, however, the unemployment might not fully reflect the economic situation due to factors like labor oversupply from significant migration. But, historically, cryptocurrencies have reacted quickly to economic shifts, which have often led to traditional markets. For example, cryptocurrencies have been in decline since spring, possibly also aligning with the start of a recession. And if this is the case, much of the recession-related market reaction may have already occurred in crypto, which is relatively a good thing, because stocks tend to follow later what crypto starts. And what I feel is, if a recession is indeed underway, crypto markets have the better chance, are, likely to be among the first ones to recover once the Federal Reserve starts printing money. And yeah, that's more or less about what's important, what's going on, And I feel as we move forward, we're seeing the peak years of globalization, wealth concentration, and financialization. And I feel that the coming years, might usher in a new cycle of, prosperity and genuine growth, if that's the case. But for now, central banks' money printing will likely keep asset prices high, benefiting risk assets like crypto. But on the contrary, what I feel is that the interest rates set by the Fed were very high for a very long time. Central banks printing money would definitely, keep the asset prices high. But is that a solution? Is that a long-term solution? We never know. It might be, wiser to consider taking some profits time to time. And yes, that's how finance works. That's how the money markets work. So yeah, what did you think about the recent crash? Do drop your thoughts in the comments below. And also, don't forget to hit that like button, subscribe to our channel, and also, push on that notification bell so that you never miss an update. And yeah, stay safe. I'll catch you up in the next video. Till then, bye.